Boom, there we go, ladies and gentlemen. Hello and welcome to another episode of Dream Chasers Interviews with the Future. I'm your host, Adam Carswell, joined today by David and Bryan Miller of Capital Stack Investments. Before I forget, I must say it once more. Hi, Grandma. Hope you're doing well today. Thank you for tuning in, everyone. And we've got a great one in store for you today, to say the least. I've gotten to know these two individuals pretty well, I'd say, over almost the past 5 years. David, I know when I first learned who you were, it was around the time when I first met Hunter Thompson, who's an original connector here. And you were in one of the first few episodes of his podcast. And he was like, Adam, like, I know you might not know much about this industry right now, but just go listen to the first 30 interviews. You'll go from 0 to 100 really fast. And I remember David's interview, and it was just like, this guy is the world's great. I like to think that I'm the world's greatest networker, but I think David's got me beat, guys. And you'll see how and why here today. And I'll just never forget listening to that interview. I'm like, man, you could tell this guy's just really good at bringing people together. I've seen you MC, other things like that. And so that's a little bit about David. I know Bryan's sitting over there like, this guy is also a savage, to say the least, as well. I've heard many cool things about Bryan, but really, Bryan, this is the first time I feel like we really got to hang out. So I'm looking forward to getting to know you here better today as well. So that's enough out of me for now as far as breaking the ice. I'll go to David and then over to Bryan if you guys have anything you'd like to kind of weigh in on there before we get to the details.
Well, first of all, let's not undersell yourself as a savage beast, as a networker. I think my favorite Adam story is the first time we ran the Intelligent Investor Real Estate Conference. My boy scootered like 17 miles to get to the conference from his hotel. But you know, it's something about this industry, about having passion and determination is a big part of it, right? And I think that's a big part of what's driven me throughout this journey, right? I'm an ex-corporate guy that got into, real estate as my salvation, the ability for me to spend more time with my family and be self-employed. And I've loved every step along the way. And Bryan and I got connected, man, almost 10 years ago. We've been kind of co-investing together and, advising each other on things. And, we kind of formalized that relationship, about 5 years ago. And we're doing some cool stuff now with Capital Stack.
Excellent. It's nice to be on. So thanks for having us on, Adam. Dream Chasers. I love the name. And real estate is a dream that you do chase, and it's an obtainable dream. That's the beautiful thing about it. It's not necessarily instant. It's not going to take you overnight, but if you do the right things over a period of time, it's amazing what happens. Just to you as a person, the way you have to grow, what you have to learn, all the cool people you get to meet along the way, because it is a team sport, and it's just exciting to do it. And it's exciting to see the benefits of that, what happens over a long period of time.
Yeah. And I think, so when I see you, Bryan, I think of the stories that I've heard, which is like, hey, this guy once upon a time was like a stud in Hollywood, or maybe he still is, or something with music. So we're going to go the celebrity direction here if we can. Kind of tell us about your background there briefly.
Sure. So I still am very active. For the last 25 kind of years, I've worked as a composer, writing music for film and TV projects in Hollywood. So that's been super fun. I've worked for a lot of cool projects, and but along the way, I saw some of the artists, and you hear all the stories about the musician who made millions of dollars and then ended up broke at a very young age, and what are they going to do? So I knew I had to figure out a way to preserve that. So, and also I was very independent. I had a brief corporate stint when I was in college working for a really horrible car rental company, right? And I ended up missing a family vacation while I washed cars and delivered cars. And it was just like, at that point, I was like, I don't want someone else to basically dictate my schedule, to tell me what I can do, what I can't do, when I can do it, when I can't do it, and have to miss these super important things in life that a lot of people end up missing because of obligations to work. So I knew I wanted to be independent. So the composing route allowed me to be independent. But then I also knew that I wanted to build a future for myself. And the only 401k plan was the one I funded myself. So I started, buying real estate, investing long-term, just to think about, okay, hey, it's me. There's no corporate pension here. There's no other plan. And a lot of people get faked out because they think there is a corporate pension until that pension goes bust, or they think, hey, I got security in this job. And it's like until they get laid off, 4 months before their severance package or before their pension actually kicks in. So just the kind of the desire was, hey, I want to take this income that I'm making and I want to take a good chunk of that. And I want to start building a second business that's going to run passively and create a lot of passive income. So that was the catalyst and the reason why I started.
And so I'm sorry if I missed it, but how did you uncover that real estate was the direction you wanted to go? Because I feel like that's probably not typical within the entertainment industry as well, for that to be someone's first investment outside of music. Yeah.
Sure. Well, my mother-in-law actually had 4 rentals and she had them all paid off free and clear. And every month she was traveling the country. She'd be like, I'm going to Cairo, I'm going to Ireland, I'm going to Alaska. And it was amazing to see just 4 simple rentals when they're paid off and you have that, free cash flow of, $4,000, $5,000 a month. The beautiful thing about that is next month you get $4 or $5,000 or $10,000, whatever you build your machine to be, but it's that repetitive nature. And if you want to be slightly irresponsible with some of that capital at that point in your life, the great thing is you got $10,000 coming next month, or you got $20,000 coming next month. So it gives you a real sense of freedom, because it's one thing to have money, but money can actually, that whole thing, more money, more problems. I've had my share of experiencing that too. And I don't want that to be the way it is. And so you got to figure out, how do I take this resource, which is a blessing, and make sure it continues to be a blessing in my life and not become something that drags me down or I'm worried about. The beautiful thing about cash flow is that cash flow keeps coming, keeps coming, and keeps coming. And you can take care of the goose. You don't have to dig into your net worth on an ongoing basis. And kind of, the typical retirement plan is get $1 million and then try to spend it down as carefully as you can. And just the week before you die, you want to be broke, right? Because your 4% rule is you're just whittling down. I find that such a horrible way to live. And it would be really hard for me to even spend the 4% because, what if you need 5 or 6 one year? So it's very restricting, where if I know I have 10 or 20 grand of cash flow coming in every month, it just gives you so much freedom to do what you want to do.
Absolutely. Love that. And I see David nodding along there. So on that note, David, how did you and Bryan first get connected and decide, hey, let's go ahead and take this to the next level and start working together?
Excuse me. So actually, Bryan and I met the same way that Hunter and I met, right? So I run a real estate investment club called For Investors by Investors. And I think, Bryan, you started going to the Pasadena chapter, and Christina Suter, who's a good friend of both of ours, is the one that first connected us. I've had, over my course in real estate, which I look at as being the ultimate, having a real estate license, being involved in real estate just gives you this chance to be an entrepreneur in real estate. And one of the things that I was really involved with was helping people invest in real estate using their retirement account, right? So Bryan was talking about 401ks, and he started converting some of his into real estate versus traditional investments. And, we got connected, and I was advising him on different ways of doing that. And then we started looking at different types of deals, and we became friends, and, we just kind of grew our relationship from there. So, from a networking standpoint, Adam, like we talked about earlier, For Investors by Investors has given me the ability to be connected to all these amazing people, right? And I think the number one lesson I've learned in real estate is that real estate is not a property business, it's a people business. And the better quality of people you're connected to will directly correlate to the better quality investor you become. And it's not just people that you co-invest with. If you have a rental I had this conversation yesterday with one of my clients who has an opportunity to have a tenant in one of his properties, someone that he has a relationship with, but they don't want to pay full market rent. And his question was, is it worth it? I was like, absolutely, right? Like the quality of person is better than the amount of rent you can get, right? Because if there is going to be a problem, and there will be, right? Because, there's one thing about tenants and humans in general is, people are crazy and they do crazy things when crazy times happen, right? So the quality of person is more important in real estate than the quality of the real estate. And, that's, the reason why I love to network, and the reason why, the way I've kind of grown my business, over the years is by getting connected to people and building relationships with them and seeing how far those relationships can go.
Yeah. And on that note, Phoebe, for investors, by investors, which maybe I'm biased, but I've seen so many beneficial things come from that group and ripple out into my own life. Is there a way for anyone tuned in to kind of just go check out that group, check out Phoebe, and maybe if they're interested, start attending those events?
Yeah, it's a very Southern California based environment before COVID, right? So, once COVID hit, we took everything online. So if you go to meetup.com, it's the best way to find us. Most of the chapters that are running are in Southern California. We do have a couple in other parts of the country, but right now, most of the things that we're doing is still online in Zoom, transitioning back into in-person meetings. So just go to meetup.com, search for investors, by investors, and make sure you take, a lot of times on Meetup, it'll put a mileage restriction when you do your search. Make sure you take that off so you can see all of the different for investor, by investor groups. And then, just join the meetup. It's free. And then when you're joining, all you're doing is opting into that group's meeting invitations. And then when you see a topic that is interesting, go ahead and register for free and join and listen. And it's high quality content that you'll get, for free, which I think our tenet for Phoebe has been the more money you spend on real estate education, generally the worse it's going to be. People that are just kind of giving you their knowledge and their information for free to help you out generally are giving you better information than people that are trying to keep you in their purchase funnel and, get revenue out of you in general. Right. So, so that's the story on Phoebe, and, check us out.
Yeah,
I'll second and jump on that is going to the Phoebe Pasadena was a terrific decision for me. I had checked out different clubs and never really resonated, but it was such a great club. At one point I tracked that I had made $1 million from showing up to that one event because I met a flipping partner. I ended up funding his deals. We ended up splitting the profits. I met David out of it. I met Jeremy Roll out of it. Lots of many great things happened out of showing up. So it's a great way to network, and it's a great organization.
And I think, especially as David mentioned, they're transitioning back to in-person events. It's kind of a Southern California focused group. But if you're anywhere in the US or around the world right now, it sounds like they're still doing virtual. So just take a moment to kind of get your name in the hat there before they go back to in-person. That way you're in that network. It's just a really great group of individuals to be a part of. So
and Adam, I'll even just add one quick thing. I think there's a part of Phoebe that will stay virtual, right? There are a lot of conveniences. It's funny how we're all craving to be back in person, but I think we're also going, when we have the ability to be back in person, there's still going to be a lot, we'll miss the conveniences of being on Zoom. And even from my chapter, we envision, moving forward that there will always be a component of us that stays online now, because it allows us like this, what you're in Florida, I'm in, LA, Bryan's in South Orange County, yet here we are all together creating great content together. So there's a lot of advantages when we can use Zoom versus having to use Zoom that I think will continue.
Totally. Okay. So before we got started today, you guys mentioned a concept to me called, I think it was 4-to-1. And if I'm getting it wrong, let me know. I want to start with Bryan and then transition back over to David. Am I getting this right? What is 4-to-1? That's the question. What is 4-to-1?
Sure. So one of our current strategies, because Dave and I have been doing this for a while and you learn a lot. So what we've learned is the simpler you can build, the better. And we like to build because right now in the market, it's hard to find a deal, right? So a lot of times you're paying market rate for it. So how do you acquire an asset for below market? Well, you build that asset. So like in LA, we can build for a 6 cap and it's valued at a 4 cap. And that 2-point spread is worth a lot of money, right? And so it allows us to instantly create value. Well, maybe not instantly because we have to build the product, but it allows us to acquire that asset at a discount, right? Because we're actually building it. But it allows us to own an asset below market value. So our strategy is to take a lot in LA because it's a very supply constrained environment and market, and there's a lot of demand. So we're going to scrape the old house that's there, build 4 brand new townhouses, and now by right, We can do that so we don't have to go through a lengthy entitlement process. It's simple construction. It's all wood frame. And then at the end, we can add an ADU. So now we have 5 units. Now we can put commercial debt on that to hold it long-term, to get more favorable debt. There's just a lot of advantages in this very simple model, but we find it to be very powerful, and it's kind of where we're pushing right now in the future.
Yeah, and I like, I think David mentioned this also before we hit record today. It's the original value add strategy. You know,
no, it's the ultimate value add strategy. Don't mess up our tagline. Yeah, no, look, I mean, when we talk about adding value, like, how much more value can you add, than scraping a single family home, 1940s, 1950s construction that's past its usable life, but it's on a multi-family zone lot, right? So basically scraping that, starting brand new, as Bryan mentioned, it's not a 4-2-1, it's a 4+1, right? Which in real estate, 1 to 4 is residential. Anything 5+ is commercial, right? And 1 to 4 residential has a completely different way of financing it. It's a completely different way of building it. It's different codes. It's different parts of the city, different inspectors. It's residential. It's meant to be simpler. Commercial becomes more complicated, right? Especially when you get into larger commercial projects. And, as Bryan mentioned, we've been doing this for a while. I think, as we've gone through the years, we've gone from how do we take a complex project and try to do it more efficiently and simply to let's just do simple projects, right? We don't need the brain damage. We don't have to outthink, CEQA and all these different layers of approval through the state of California, the city of LA, the Coastal Commission. There's so many different layers when you get involved in new construction, especially in California. So this strategy allows us to build what technically is a residential home, but by adding the 5th unit, it moves on the commercial side. And the lending part for holding commercial is so much better than non-owner occupied residential. So we get to come into it simply, and then we get to hold it in a more complex structure that's more favorable, for us as owners and investors.
Can you guys kind of maybe elaborate on a deal either that you're working on now or that you've done recently that you really like, that just kind of exemplifies this model, so that way our listeners can get an idea of what they would be, potentially investing in if they invest with Capital Stack?
Sure. I'll tell you about one we did down in Boyle Heights. So same thing, we scraped the lot. We built 3 duplexes because we were allowed to do that. So it's 3 structures on 1 lot, right? So you buy the lot for about $500,000. You put about $1 million of improvements in it. So now you're 1.5, 1.6 with some other costs, maybe a little above that. You sell it for 2.5 based on the rents. So you can basically create $1 million of value by doing that. So that's kind of just a quick overview strategy of why I kind of fell in love with it. And that project delivered great returns. Again, simple wood frame construction. What Dave was talking about, those complexities, that's what gives development a bad name, and deservedly so. So we've learned to just try to avoid all those kind of complexities and go as simple as possible in a repeatable process where you're building the same basically 4 units over and over and over. I find sometimes people get bored and they want to do more creative things. And I've never built one of these. Let's do that. That'll be fun. But all that adds complexity and learning curve. So simple, stick to the basics. 4 units, 4 townhouses, brand new in good neighborhoods, not the best neighborhoods, definitely not anything scary. And there's rental demand for that, like day in and day out. These will rent for $3,500 a unit. So you think about it, it's like you're getting 5 rents.
Yeah. Yeah. I mean, some of these we're renting for, $4,500, $5,000 a month, for some of the newer stuff that we're doing, because just like everywhere, right, we have this huge shortage of housing everywhere, right? It's not just in LA, everywhere.
It's interesting you say that, because, the stigma is everyone's leaving California, right? But hearing this obviously sounds like things might be a little different than what the news is saying.
Check the 405. It's still pretty far. It's still pretty backed up. If everyone's left, there's still 2 hours of traffic there. So.
Yeah, and look, this is one of my favorite topics, right? I love that everyone's leaving California, the mass exodus of California, right? there are people leaving California for sure, right? It's, California is the number one state in the United States for people leaving California going to other states. But it's also the number 3 state in the country for people leaving other states and moving to California, right? California also has more international people moving to California, because if you're moving here from Pakistan or China, right, and you're a highly educated aerospace engineer, right, you're not going to move to Austin, right? There aren't any of those jobs in Austin, right? So yeah, look, California isn't booming as far as its population. It's basically holding pretty flat. But we've got, just in the city of Los Angeles, there's 10 million people. There's almost 15 million people in the MSA of Los Angeles. And we've got job opportunities that you just can't get other places. Like we've got a huge aerospace community. We've got a huge entertainment community. We've got a huge professional services community. We've got a huge distribution community. Like the economy is so broad. And at some point in time, for people that are young, affluent, educated, wanting to progress in their careers, more than likely they're going to have to spend some time in California if they want to climb and continue to grow their careers, right? And those people may not want to buy a house. Maybe they're only moving here for 3 to 5 years and they want to rent something, right? So that's kind of who our avatar is that we're building for. That late 20s, early 30-year-old young professional, engineer at Netflix, right? That's going to be out here for 4 to 5 years, enjoys new construction, wants to be in a very walkable community, digs the rooftop decks, the great weather. And we even though that person may leave, as soon as that person leaves, there'll be someone else who will move here, right? That we'll have housing for. And one of the benefits of new construction is, while it's a pain in the butt to get it out the ground compared to just buying a multifamily, when you're done and you've built it, it's a very easy asset to manage, right? It's new construction. You don't have plumbing issues. You don't have electrical issues. It's just a very inexpensive real estate property to own long-term.
And do you guys have a asset management branch of the company for, I guess, are all the projects buy and hold? Are you managing the assets, or, because I think you mentioned maybe selling them in certain situations as well. So just what does that side of things look like after the development is complete?
Sure. There's different strategies for different assets. Some are build to sell, but wanting that residual income every month, if you can build and then build to rent, is what we're trying to push for, right? And again, it depends on the investor, but I noticed that the more savvy investors, they're fine with, they want to hold that asset for a long time, if not in perpetuity. When they're buying assets, they're like, this would be a great asset to give my great grandchildren, right? Because that house that maybe when we're done with one of these 4+1s, it's worth 3.5 million. Well, eventually it's going to be worth 4.5 and then 5.5 and then 6.5. It's a little hard to imagine now, but if you look back just 10 years ago, I bought my single family house in LA for $240,000. It's worth like 1.3 now, right? And that was 20 years, but that's not just a double, right? That's almost like a five times increase. So the beautiful thing about California is there is appreciation here, and so you're partly betting on that appreciation, but then you can also participate in cash flow as you have rents coming in every single month.
Yeah, and I want to add to that too, because I think it's important, as Bryan and I have matured as investors, right? Where early on we got in development looking for the big pops, right? And build it and sell it and do that. We're actually moving more towards, look, we want to build it and hold it, right? Our niche is new construction in Los Angeles, which everyone else is terrified of, right? Like, if you think people are scared of retail and scared of hotel, try new construction in California, right? Like but there's a huge amount of demand for housing here, right? So finding a way to deliver projects, and then for us, right, like, we're getting older, our kids are getting older, right? We are starting to look at building kind of that generational part of our wealth, and, building these things to hold them, especially because they're new construction. We can hold them for 20 years and they'll still be newer construction, right? 20 years from now, versus that 1980s apartment building that may need, a ton of updates, we like that idea. And that's really what we're kind of focused on right now, is building, holding for cash flow. And then, Bryan mentioned earlier that the freedom of knowing that you've got that 4 to 10 grand a month coming in of cash flow. What he didn't mention is that you might also be building 4 to 5 grand a month in appreciation and value on the property, right? So even though you're spending the cash flow, that asset is still earning growth. And LA is such a huge market for long-term appreciation. And as that appreciation builds, you get more options, right? There's ability to pull money out of that, buy more property. Your rate of return goes higher because you can return some of your initial capital that can be reinvested. So playing that long-term buy and hold game is really what we're kind of focused on right now.
Yeah, and I love the focus and ability to zone in on your niche and go after, as you mentioned, new development in LA is so powerful. You hear it all the time. I'll say it again, find your niche and get rich. Are you guys looking right now for capital partners? Like, what is, I guess, from a scalability perspective, what's going on at Capital Stack right now? And aside from, bringing on new investors on the passive side, are you looking to work with anyone on the active side?
Yeah, I'll tackle that one first. So we are looking,
yeah.
right? Yeah, it's, again, we want to hold property, right? So, we're looking at bringing on capital partners. And I think it's also important, look, Bryan and I are not contractors or builders. We're developers, right? And part of development is putting together the team. So we have local resources on the ground that we partner with, right? We have a certain partner for this 4-in-1 strategy that we're, bringing funds together, purchasing one of these things, getting it out of the ground, and then holding it long term. So yeah, we are using investor capital as well as our own capital to do this in bulk and do this over and over again. A 4-in-1 is a fairly small project compared to a 300-unit, multifamily building that's going to take years to get through entitlement and then years to build. Versus on our projects, we can get them through entitlement and out of the ground in less than 18 months, sometimes even faster than that, right? So, we're really, when I said it's the ultimate value add strategy, I've certainly seen my share of multifamily deals where you don't start seeing cash flow for 18 to 24 months because of the CapEx and having to reinvest in profit to fix up the unit. On ours, we don't have to evict any tenants. We don't have to deal with, in LA, rent control is a big thing. We don't have to remove tenants to get them out because we're buying a single family home that we're scraping and everyone's gone. And we can basically start with a clean, fresh lot. And that's just not from a dirt perspective. That's from a people perspective too, right? We don't have any people that we're encumbered with. We can start from scratch and we can move very, very quickly and then, start generating cash flow. And the second you complete that building, as Bryan mentioned, those pops that, building at a 6 cap and then that 4 cap, that happens in a matter of minutes, right? When we get CO on that building, boom, just like that, we've got that huge bump in value. And, now we're off and running and cooking with gas.
Bryan, any commentary there?
Sure. I think it's interesting. Like there's, like Dave mentioned, there's some kind of prejudice or assumption that this is really difficult, and parts of it are very difficult. And what we've learned to do is try to avoid those difficult parts. It's sort of like buying retail when everybody else is running from retail, or in my case, what was kind of revolutionary from our family is buying single family, when I call it running into the burning building. Everybody was running out in 2009 going, real estate is over, it's horrible, it's going to fall even further, like don't go in there. And to run into that burning building and buy as much as I could was really revolutionary financially for our family. So doing things where other people aren't, it's good to think contrarian in that. Like if you go where everybody else is trying to buy a value add deal in Dallas right now, you're gonna be lots of competition. You're gonna need a couple $1 million hard day one. It's a tough business because everybody's playing that game right now. So it's good to think about allocating monies maybe where not everyone else is, doing some different type of strategies, and where you have some different type of upside as well.
And so super what's the word I'm looking for? I couldn't agree with you more as far as going left when everyone's going right. The strategy in life in general that I think you always just got to keep it in the back of your head, and be very observant and see what's taking place in the market. So for you guys, what do you plan on doing I mean, I don't think anyone's ever going to kind of say, oh, the number one way to go for everything is development in LA. Like, I think you guys got that on lock. I think for a long time that will be considered going left. But 2022, 2023, is the business plan or model, is it going to change? Are you thinking we're just going to stick with kind of what we're doing for now? Like, what do the next couple of years look like for Capital Stack?
I mean, I think you go with what's working. You also go with what the market's giving you, right? So I bought single family when it was on like 25 cents on the dollar, right? When I could buy for $33 a square foot. Like in the last 10 years, I've bought very little single family, right? Because it wasn't on sale anymore, right? I went into mobile home parks when you could buy them at 8 and 9 and 10 caps, right? Now you buy them at 4 caps, which is way more expensive. And I've still made some allocation to certain partners, but again, you have to be careful, right? So I think this strategy works. It's simple, so we'll work that. But if at some point in the time in the future we feel like there's a better way to approach this, then we want to be open and flexible. It's important to, again, like what I said, like take what the market is giving you. If we find that there's deeper discounts in something else, or office is still very scary to me personally, but at some point that it may swing so far that it becomes so inexpensive to acquire an office building that if you can think differently and you can think like, maybe I can turn this into a bunch of service businesses and a dog groomer and a kids ballet place and places that are not Amazon, maybe pivot a little more toward retail from the office space, using that same building in a different way. Like when there's opportunity and when there's discounts is when you have to think creatively and say like, this is what the market's giving me. How can I figure out a way to take advantage of that? Rather than saying, this is the only thing I do. Like I buy self-storage. Well, self-storage at a 3 cap with, a vacant lot next door that someone else can buy and build another self-storage on. I would advise people against staying in love with one strategy. And just because something's worked in the past, the market changes, things shift, people shift, right? So it's important to be flexible and to kind of think 3 to 5 years down the line or 10 years down the line. What like when we look at these assets and we think in 10 years, will we want to own these assets? And we'll be like, why didn't we buy more of these assets, right? In 10 years, they're going to be worth a lot more than they are worth now. So trying to think a little bit of a future ahead about what's going to happen is, I think, a very wise thing to do.
And I'll add, Adam, I think, one word, Brian, you didn't mention was diversified, right? Like, look, this is what we're doing with Capital Stack right now. It doesn't mean that's the only thing David and Bryan are doing right now, right? Like, we are diversified investors. And again, it's going to come back to the people we've been connected to, right? We've had the ability, the luck, right? The fortune to be connected to all these different people that allow us to diversify our portfolios and have assets that we own in different states and different asset classes. And, one of the things that I love about the 4+1 strategy is it starts off as a riskier development play, but within 2 years, it ends up being a very conservative Class A multifamily play, right? And I love the fact that I get diversity within that exact same investment, and it happens in a fairly limited amount of time just because of the speed in which we can ultimately transition that investment into something new. I am starting to get intrigued with some crypto stuff, and I know that you're at this crypto conference that you're spending some time in. I'm starting to look at some of those Bitcoin mining funds, and I think there's some opportunity there. We're still invested in some. I'm still invested in some other things that are generating cash flow, but from our niche with Capital Stack, we think that there's an opportunity in creating housing in Southern California. And we're going to play that out for a few years and see where that takes us.
Yeah, I'm looking forward to the first 4+1 loaded with Bitcoin miners. I'll be paying attention. I'll look out for that one.
Nice.
But
we'll load them into the ADU and we'll have a little factory down there. So.
So what would you guys say? What are some of the secrets or little tweaks that you found to be successful in regards to growing your investor base, communicating with them, keeping your investors happy, obviously getting, the return of capital, et cetera. Cash flow is always good, but you guys are your people. So what are some hacks that or secrets that you've uncovered that help you grow your investor base and keep them happy?
Well, one of the things is we have a resource which anybody can get right now for free. It's called Lessons from 50 Deals. And they're lessons that Dave and I have learned from doing, a whole variety of deals. It's kind of a case study on different assets, maybe that I acquired, what happened to them, the value on them, even deals that seem to be like, this is kind of a medium deal, but you look over a 10-year period of time and it's like, oh, wow, I made 80 grand off of a kind of a do nothing kind of what looked like to be a very break even kind of asset. And then 10 years later, you're up like 80 grand. So that's a great resource. That's a way we stay in touch with people. People can go to capitalstackinvestments.com and download that for free. It's kind of a way we share and give back. It's been fun to create these are the learning lessons, and and there's things that went super well and other lessons that we learned that avoid this and stay away from that. That's also equally valuable to people as they do that. So that's one way that we've used to kind of grow the investor base and stay in touch with people.
Yeah, and just one correct, it's not a downloaded, it's a sign up for it, right? So when you go there, it's something you can sign up for, right? You'll receive lessons over a period of time. And I think, look, communication is a big part of this, right? With any, the hack, right? Again, this is a people business, not a property business, right? Communicating with people how things are going, even when things aren't going exactly according to pro forma, right? If they understand what what's happening, people are far more less likely to get upset because they've got information they're reacting to and they feel like they're along for the ride and part of the journey. So I think that's a big part of it. And honestly, look, Bryan and I, we're not swinging hammers and pouring foundations, right? Like our role in this is the communications part. It's keeping people informed. It's helping to structure it, right? Helping to raise capital, but more importantly, we also act as oversight on behalf of our investors, and then we communicate the progress. And the best way to communicate the progress on how things are going is staying involved on a day-to-day basis. So even though we're somewhat investing passively, we are involved actively in how the projects are going. We're providing some accountability for our partners and then turning around and taking that information and making that communication back out to our investors.
Love it. Love it.
Let me just add, Adam, one of the other, I would say, kind of on that, how to do things differently, I think really focus on the long term. I think so many people that get in trouble are focused on short term or one deal kind of thing, or trying to squeeze too much juice out of a lemon and not really taking care of their partners. So I find a lot of people I see when they take a short term approach, when they take we're going to try to maximize our profits right now. It's dangerous. You got to take care of the people that are alongside you. And it's really important to be focused about the long-term thing. And whether that means you're lending money to a project in order to keep everything going. And, there's times where, Dave and I have done that in order to try to keep things going the right direction. You just have to be willing to do the right thing in order to keep things going right. And thinking about oh, wow, is that really the most important thing for the moment? It's probably not, but in terms of long-term and in terms of doing the right thing, I think it is. So by choosing to do the right thing, it will allow you to develop a good reputation, because I feel the people that don't, they're very short-sighted. They're very thinking about today only and not thinking about what's going to happen to their reputation or their long-term kind of ambitions, because it doesn't take long to get a bad reputation.
True, absolutely true. So yeah, just keeping that long-term perspective is super valuable. And I guess I say, Bryan, thank you for the friendly reminder, because sometimes we hear these things dozens of times, but it's until this moment you hear Bryan finally say it the 18th time, oh yeah, I should probably keep thinking about thinking long-term. So and I want to commend you guys on your team and the team that you've built, because my wife and I got to go out with Bev and Sam and a few other people on the Capital Stack team, and I could say, as David mentioned, focusing on growing the team becomes really important. They have a very happy, employee base. Your crew loves you guys. They think you guys are literally the best people ever to work with. So whatever you're doing, keep that up.
Adam, I had this conversation yesterday with one of my mastermind groups, and I think it's important that we treat our employees or our people around us, right, like they're our investors. They're our most important client, right? Like they're the greatest leverage that we can invest into. And I think Bryan and I, it's one of the things that we share, as business associates and friends is the way we treat the people around us, because we understand we can do more together through people than we can do on our own. So I appreciate you saying that, right? Because I think it is an important part. And one of the things that we've kind of based our reputations on is how we treat people. And that's how we treat our employees, how we treat our investors, how we treat our partners is the most important part of all of this. Because at the end of the day, right, people don't remember what you say, they remember how you made them feel, and staying rooted in that is super important as you continue to move through investing, through life, through anything.
Yeah. And one thing I wanted to follow up on before I forgot is just briefly, you mentioned making sure you communicate with your investors through good times, through bad times. How frequently are you guys communicating with your investors?
On the new construction stuff, it moves slowly, right? So, we get communications out on a quarterly basis, right? Just so they know what's happening. For the stuff that when it starts cash flowing, right? It's actually depending on the size of cash flow. If it's smaller amounts, like, these 4+1s, it's great cash flow based on the amount of the asset, but it's not like we've got this huge amount of cash flow like a 300-unit apartment building would do. So, some of that stuff we might do quarterly. For the bigger projects, we might do that monthly, depending on how much, cash flow we're actually talking about. But at least on a quarterly basis, it's important to give people an update and let them know what's going on. So, we try to do quarterly or faster, depending on the project.
Okay, awesome. So we're gonna get ready to wind it down here, and I got a question for you guys. This is a deep question. It's tough. I think especially Bryan, having the musical background, you might get stumped. So I'm gonna just say this in advance. Just go with whatever comes top of mind for you on this. Don't feel like you got to sit here for 5 hours. But I am warning you guys. You're gonna have to think about it for a moment. So if you were on a desert island for an indefinite amount of time, and you had to take one album, not a Spotify playlist. I mean, you guys, I don't think Spotify playlist is really when you were growing up, so you don't have to worry about that. But one album that you got to take with you on this island until you get saved. What are you going with? And we'll start with David and close with Bryan on this one.
Wow, one album. That's a great question. I'm an old classic rocker, from at heart. And one of my favorite actual albums, there's I think it's called Encodium. It's a Led Zeppelin album, and it's actually different artists that recorded Led Zeppelin songs, right? So it's Sheryl Crow, and it's this range of, country artists and hip hop artists and all these different artists that are singing songs that I love, but it's got a really cool vibe. So if I had to take one album that I was stuck to, I would get one of my favorite bands with this range of music. So hopefully I wouldn't go stir crazy.
Interesting. Encodium. I got to look that up. That's very unique, and I didn't know that existed. So thank you. All right.
I think I would go crazy listening to one album over and over. So I really like variety. I like all kinds of music. So that'd be a tough one for me to choose, but maybe I would take U2 Joshua Tree album. So
there we go. U2, which one is it?
Joshua Tree.
Okay. Joshua Tree. Yeah, I'm going to add both of those to my Spotify playlist.
There you go.
Cool.
Nice.
Awesome. So I know we said it once. We're going to say it a few more times here, ladies and gentlemen. Remember, you can go to Capital Stack Investments. That's with an S, capitalstackinvestments.com to check out Capital Stack. What was the name of the 50 lessons again? What was it called?
Lessons from 50 Deals.
Lessons from 50 Deals. So go get on that list. It comes to you said in kind of like an email form, or is it downloadable? Yeah,
exactly. Email.
Cool. Yeah. So capitalstackinvestments.com. One more time, guys, go check them out. Get on their list. Consider investing with them. I know I will. Bryan, David, any parting words of wisdom? We'll go in that order. Bryan and David for our listeners before we close it out.
Sure. I mean, the whole goal of all the real estate investing is is freedom, right? Is independence, is being able to take care of your family, is being able to take financial worries off the table. And so I think to keep focused on that, also to keep understanding, like keep pushing in this direction. But I would say life is more important than your portfolio as well. I think a lot of times people can get very, wrapped up into building. Like, I'm doing this for my family. I'm doing this for my family. I haven't seen my family in a month, but I'm doing this for my family, right? And it's really easy to basically get over obsessed. Because I mean, hey, I love this world. I love investing. I love the big spreadsheet of like, what are all the assets doing? What are the values? And it's super fun, but just kind of remembering what's more important than that. And what are you really building for? And what's really, here's a good question to ask that I heard it the other day. I have not answered this myself, but what problem are you solving for? Right? So what are you trying to do? What are you trying to accomplish? And why are you trying to accomplish that? So that's a great one to meditate on a little bit and spend some time. And it's been a challenge to me to think, okay, why are we doing this whole, why are we doing all of this? I mean, there's some very obvious questions like financial independence, freedom, all that kind of stuff. But to really think about, I would say, like, keep pushing, keep learning real estate investing. It's super amazing and awesome, but remember, life happens at the same time. And it's really important to keep trying to succeed on all areas. Like for me as a husband and a father, and, that I find those more challenging on some days than building a portfolio. Then the numbers, and you do the right thing in the investment things, and good things happen. So I think that would be the advice I would share.
Powerful stuff. Thank you. Go ahead, David.
Yeah, I mean, look, I won't dwell on family. I completely agree with what Bryan said, right? Like we do this for a reason, and that is for our family. I would say the one lesson I'd impart, and this is always a lesson that I impart on, especially on newer investors, is that you need to determine what your own goals are. And Bryan was mentioning that, not chase return, right? Think about the ownership experience of different investments. And if you're looking at investment A versus investment B, the best way to compare that is through your own lens, right? Like, which one of these is going to be a better fit for me? Which one solves the answers to that question Bryan just asked, right? If you just start looking at investments and comparing them against each other versus comparing them against your own lens, that's the most important part, right? So have your lens, understand why you're investing, what's important, and then analyze that through those lens versus comparing them against each other. And I think you'll make progress a lot faster, a lot quicker.
Love it. Love it. Know your lens, ladies.
The way I call it, Adam, is know thyself, right? Like, you can't start understanding other things until you understand yourself, right? So honestly, that's where you start as a real estate investor, right? Is know thyself. What is important to me? What am I trying to accomplish? And then go chase deals, not the other way around.
So good. Such good stuff today, guys. So yeah, Bryan, David, thank you for hanging out with us here on Dream Chasers. Ladies and gentlemen, this is Bryan Miller and David Coe of capitalstackinvestments.com. That's their website. I can say it one more time until you go check it out. capitalstackinvestments.com. Go check them out. Yeah, gentlemen, thank you for investing your most valuable resource with us here today, your time. Our listeners as well, thank you. And yeah, remember, in all you think, say, and do, take it to the next level.